again, if we are bullish, we need to create a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, right?
Yes, uptrend. Yeah.
Uptrend. Vice versa, if we are bearish, we need to create a lower low, a lower highs, a lower low, a lower highs, a lower low, a lower highs. So in this lecture, I mean, you are not going to understand market structure today alone. You understand what I'm saying?
Yeah.
So it's something that is going to take maybe a little bit of time for you to understand. So look at these two structures, a bullish structure and a bearish structure. We have intraday structure, which is internal structure, and we have external structure, which are like swing structure. So if we are talking about swing structure, we are talking about a higher time frame, a bigger time frame structure. I don't know if you understand what I mean.
Yes.
So if we are talking about a swing structure, we are talking about a higher time frame structure that is going to create a big trend for a long time, then a pullback in a long term, then create another big trend in a long term. A higher time frame structure. In higher time frame structure, we have what we call internal structure, which are like lower time frame structure, intraday structure. Do you understand what I'm saying?
Yes.
So inside a swing structure, you can find a
Yes.
lower time frame structure, which is intraday structure like this. For example, like this. You can find intraday structure like this. And when it's going bullish, you will find a lot of structures creating higher highs and higher lows in this swing structure. Like this. But remember, this one line is a swing structure. You understand what I'm saying?
And higher frame. Yes.
Higher time frame, exactly. Then this retracement of this swing structure, the higher time frame structure, you will find this kind of lower time frame structure, a lot of structure, internal structure. You understand what I'm saying?
Yes.
Good. So I know when people are teaching with diagram like this, it's kind of difficult to understand, to see them real life in charts. You understand what I'm saying?
Yeah.
But what I want you to know or take notice is that when we have a bigger time frame structure, a swing structure, right? We will also have internal lower time frame structure. You understand what I'm saying?
Yes.
So I'm going to show you in the chart because I believe the chart will tell you more, will make you understand more about the swing and the intraday structure, which is the lower time frame structure. You understand what I'm saying?
Yeah.
Good. So now let's look at what pair should we look at? It doesn't matter, right?
Yeah. Just choose one.
Okay. So we already have an GJ. We will choose another GJ, JBP, JPY, Wanda. This one. So now let's go back to, let's start from the monthly time frame now. In the monthly time frame, yes, Vasil,
Yeah.
what do you think this market is doing?
Uptrend now.
Good. Remember, we are in the what? Monthly time frame, right?
Yes.
Even if you go to the 3-month time frame, we are still the same. What do you think the market is doing?
Yeah. Uptrend. Bullish.
Correct. So if I ask you to identify a low and a high in this market, where would you identify? So this right here is a high. You understand?
Yes.
And this right here is a low. I hope you
Okay.
know. This is now our swing structure, our higher time frame structure.
Okay.
So this is the 3 months. This is basically what market did. We created a low, a high, and a low. So we expect market to create another high. You understand?
Yeah.
So market is still respecting this low. Until this low is being broken for some reason, whether with this current trend, we are not in a downtrend. We are still in uptrend. Except this low has been broken. That is why you have to understand a swing structure from intraday structure. Until this low has been broken and closed below, right? That
Yeah.
is when we have a change in state of delivery or a change of character. The market is now willing to trade, start going down. You understand?
Yeah.
So for now, we still have our low intact, our high right here. So going to the monthly time frame, you see, what do you see in this high and low? You can still see it's all the same. It doesn't matter whether you identify this one as well. It's all the same. You understand what I'm saying?
Yeah.
Both of them is just, relative equals. So it's all the same. And what do you see market did? When market rally higher, it retraced back down, right?
Yeah.
And respected this too low right here. So what did market do now? Market what? Traded back high. This is the monthly time frame. It traded high, it's pulling back down again. Remember, in your swing trade, in your swing structure, the structure is one, but in the lower time frame, the structure can be many. So going to the weekly time frame, now this is what I want to show you. You can see this is the weekly time frame. When this market was creating or going higher, what was it doing? Like this. You see?
Yeah.
Then like this. What did you see market do? Market pull back down. It created a high, a low, a high again, a low, a high, a low, a high. Now we have this current market. You see how market is moving?
Yes.
But market is still respecting our higher time frame swing lows, right?
Okay. So still it's uptrend.
Still is uptrend. Now you are correct. Still is uptrend, except this market that is trading sideways right now somehow
Yeah.
has broken these lows. That is when it becomes a change
Change
in
of
state
character.
of delivery or a change of character.
Okay.
Now, we will no longer be looking at this low as a low. This high will now become a very strong high. And what are we expecting now? Our swing structure will now be this, probably a pullback to continue going down. You understand?
Yeah.
But for now, the market is still bullish because we are still respecting our lows. So where is our internal structure? Right here. Those are our internal structure. Our swing structure still remains, whether this or this one, it doesn't matter. This is still our swing structure. You understand?
Yes.
So going to the daily now, how do you see the market? It's getting wider and a lot of structures, right?
Yeah.
So again, seeing this internal structure, you have to be able to read your internal structure as well. Where was the first time that we created a high? We created this low, we created a high, right?
Yeah.
We pull back. What happens? We now created, I will just use this high as one. Let me see if we broke this area. Yes, we broke this.
Yeah.
So we created this high and we created this low. Then before we created this high, because this high, it was somewhere around here that we broke this high. You understand?
Yes.
So what is the message I'm trying to tell you here? If you look at this structure, before we created this high, right? This high that is right here, this internal high, right?
Yeah.
Where was the last low that was created? Right here. You understand?
Yeah.
Good. This was the last low that was created. We are not talking about lower time frame now, but on still this intraday, which is daily time frame we are on right now, where was the last low that formed this higher high? Right here.
Oh, yeah. Okay. So it's
What
break
happened?
structure. Yeah.
What happened here? It becomes a break of structure, right?
Yeah.
So if we have a break of structure, don't we want to pull back before we continue going down?
Yes.
What happened? Market pull back, respected this high that broke this structure. What happened now? Market moved down and what? Create another what?
Break of structure. Yeah.
When we created another break of structure, what happened?
Again.
A
Pull.
pullback.
Yes.
And what do you expect?
Another. Yeah. It's gonna go down. Yes.
Look,
Another break of structure.
now what do you expect? See.
Another break of structure. Yes.
And now, once we have another break of structure, what are you expecting?
To go back, pull back.
Exactly. And this is how you use your market structure. So which means if this market pull back, what do you expect again? Probably a continuation, right?
Yes.
So where is the high that was created? Now, when we pull back, we created this high. Now, when we pull back, we created this high. So it might be this other block right here.
I see.
You understand what I'm saying?
Yes.
So if you look at this, there was another block right here. It could be this one right here. You see?
Yeah.
That's where we pull back to. So when we broke this structure, if we, you have to be switching time frame for you to understand where we are. If you look at this time frame, this was another block that we broke from to push back down. You see? Right here.
Yeah.
Which is this candle right here. Right here. That is why you have to be willing to switch time frames so that you can be able
to understand. Yeah.
To understand where the market is right now or where it may likely have its rejection. You understand?
Yeah.
So if we broke this structure to the downside, that means market will be pulling back up, right? For the next few days or however, right?
Yeah.
So market needs to reject from somewhere. That's why market rejected from this level. From this level. So this is now a support of this market to reject. So this is the daily time frame. We would like to see the daily time frame break and close below this area, which it has already did, because according to these candles, this is a break. Even if it's pulling back up, this is a break because this is where this candlestick literally opened from. You understand?
Yeah.
It showed you a break of structure. Again, this is what? Intraday structure. Remember, this is still our strong low, right? Because of the higher time frame area. So now, if this is the last pullback before we had this break of structure now, so we expect a pullback, right? And if this pullback now break this structure, what happened?
Break of structure. Yeah. I don't know.
That means market is now aligning with our higher time frame structure.
Okay.
So what is our higher time frame structure? Bullish, right?
Yeah.
So now the last area that market didn't retest is this area right here, because it is the highest leg of this market, of this internal structure. You understand what I'm saying?
Yeah.
Hold on, let me see this price action. I set a level here. I want GA to retest this level right here to see if we can get a sell to this area or down more. That's why I set a lot around this area almost. So we are still waiting. It didn't retest this level for me to take a buy up, but it's all right. You don't have to cut every trade. So again, where is our, yes, this is our teaching. Yes, again, we can see price has broken this structure. We need a pullback, right?
Yeah.
So what is our pullback now? Now you want to start going to the lower time frame when you want to look for entry. That is what I mean. You understand what I'm saying? So again, I said I'm going to show you another thing. When we have our higher time frame swing, right? This is the higher time frame swing, and this is the last swing of this area. If you look at this market, vasil, right? When this low break this high, yes, this was the other block, and this as well was kind of the other block, right? But we will use this last down one because we have a green candle here. You see?
Yes.
This is the last one, the last down candle. If we didn't have a green candle, we can use these two candles. You understand what I'm saying?
Yeah.
But because we have a green candle before another black candle, so this was the area that is much qualified. I hope you understand.
Yeah.
I have shown you this thing many times. Once you see a separation, let's say for example, we have this down candle, this black candle. So your other block is now these whole candles. You understand what I'm saying?
Yes.
So when price retest this area, we will be looking for entry to trade this price. But probably we didn't get any entry, so that doesn't matter. But I'm just showing you that once you see a separation of these candles, then you will be looking for a new point of interest, which is this one right here. However you draw your point of interest, it doesn't matter, but it's all the same. So vasil, what I'm trying to explain to you is that when we break this high, you see this little pullback, right?
Yes.
We never came back all the way down. I don't know if you understand. You can see, right?
Yeah.
This pullback never came back to the other block that violated this high.
That's kind of rule, or
What?
normally it's a rule, or normally it's going in this way.
So what this thing is telling you now that I want you to understand is that means this area is still valid.
Okay.
No market has tested this area, which means no matter how price is trading higher, right? Remember, this change of character that occur here tells you that this area is still valid. That means market is looking to trade back into this area. I don't know if you understand.
Yes.
Before this market will continue going higher to this high, because this is the high we are going to target later, right?
Yeah.
We need to test this level. We need to balance this market. We haven't balanced this market yet. I don't know if you are following my explanation here.
Yes, yes, yes. Yes, man. I understand. It's
If you
clear.
don't understand anything, you have to ask me.
Okay.
Like you ask, it is not a rule, but if you look at when this price moved higher before, you see, market retested this level, right?
Yeah.
This is where market moved away to break the high that was created, right?
Yeah.
Which means this is our order block. Market need to what? Come back to this order block. Ever since, you see market is trading around.
Yeah.
We came down. What do we do? The low that we created has now been
Right.
invalidated.
Valid.
You understand what I'm saying?
Yeah.
This now tells you that this market wants to turn around. So if this market wants to turn around, where will it likely go to? This level that has not been mitigated.
Okay.
I hope you are following me.
Yes. It's clear, man.
Now, again, I'm teaching you a market structure and I'm also doing analysis at the same time with this pair. So, what are we expecting now? You see, if you hear the word liquidity, inducement, we are talking about areas that attract institutional traders, right?
Yeah.
So you see this low, right?
Yes.
When we break this low, it was a change of character. At the same time, it was people who bought from here got stopped out, right?
Yeah.
So what makes it a change of character is because we break and close below it with your body of candle. I don't know if you understand what I'm saying.
Yes.
Good. So now look at the lowest low. This is the lowest low that was created closer to this area, right?
Yeah.
This is the lowest. It's lower than this. You see? It's lower than this. It's lower than this. This is the lowest, right?
Yeah.
What did you see here, Vasil? Because it's the lowest, it's hanging above this level. That is why we call it liquidity. A liquidity that is resting above our point of interest. Like this. These are liquidity. Remember what liquidity is basically used for in the market, right?
Yeah.
Institutional traders are seeking liquidity so that they can get enough money to move price. And remember, it's not just hanging anywhere, it's always around your point of interest. You understand what I'm saying?
Yes.
And your point of interest is what? Your order block, your fair value gap, whatever. An area that has not been mitigated. You understand?
Yeah.
Good. So that is your order block, in this case, this one. So if you want to identify a structure now, in this case, this is a low, a high, a low. You see?
Yeah.
A high. We created a high, a low, a low, a low, a low, a high. Now a low. So what I'm showing you right now is
Higher high. Higher low.
You see what formation market created here?
Yes.
Now, what I want you to see here is at the point where market created this low, a higher low, when did we break this market? Here. When we broke it, did we created a higher low? Right here.
Okay.
You see?
Yes.
You see?
Yeah.
Should I design this market for you? A high, higher low, higher high, higher low, higher high, higher low. You see that?
Yes.
So now, let me take out all of this first. So when market created a higher low, right?
Yeah.
We were supposed to create a
Higher high.
bravo. We were supposed to create a okay, let me just copy. We were supposed to create a what?
Higher high. Yeah.
But market failed to create a higher high.
Not in this case.
I'm going to tell you what market created now. If you can guess.
Higher low. I don't know. Lower high.
No. Lower high.
Yeah.
Correct. In this area. And you know what this means? As soon as price created a lower highs, now it's a warning that if this higher low gets broken,
It's a change of character.
exactly, we now have a change of character.
Okay.
So which means market has changed from a higher high to a lower highs, to from a lower highs now to what? A lower low. Maybe I
Good.
put bigger letter. Uh-huh. Are you following me, Vasi?
Yes. Yes, of course.
So when market created a lower low, what is follow?
Lower high. No?
You are correct. What are you doubting yourself?
No, I'm just asking, because I'm not
Yes.
doubting, maybe it's not true, it's not correct.
See, Vasi, you are going to understand everything about market right now with this identification. So when market created a lower low, it created a lower highs, right?
Yes.
And what happened? We now created another lower low. Let
Yeah.
me put it here. So remember, the last swing, this area here is kind of internal. The last swing that broke the higher high was this higher low right here. As soon as price now break a bigger time frame structure, it becomes a change of character in the bigger time frame and also a break of structure. I don't know if you understand what I'm saying.
Yeah.
Which means which means where is the high coming from that broke the structure? This is the highest high. The high is coming from this. I don't know if you understand what I'm saying. Remember, market change phase from here started doing what? Higher low, lower highs, lower low, lower highs, lower low. It was supposed to create what? Around this point, will we be looking for a shift in market structure to target where the overall order block that created this break of structure. This is the overall order block that created this break of structure to this swing structure. So, Vasil, I want you to pay attention right here. If I go to the 4 hour, what do you see now? You see a different market entirely. When market broke this structure, I don't know if I started teaching you already. No, I'm not sure. I call out this trade in this group. What happened? We created a low, a high, a low, a high right here. This is where market broke this structure. And I call out this trade that right here we can take an entry for GJ. Not this one right here, but right here is where we take the first trade on GJ. And I think, let me see, it was a daily or some, I think it was a daily we took this trade or something. Let me see on the daily time frame. Right, it was the daily. So when market reached and broke this structure, I'm going to show you now. This candle, this last candle was broken right here. You see?
Yes.
So I call out this trade that we can take GJ from here, from the body of this candle. This is how we take GJ buy to target this area. You see how intraday market structure is different from higher time frame structure.
Yes.
It is the most difficult part to understand structure, but once you understand, let me take out these points so that you can see the real markings of the higher highs and higher lows. And I want you to watch this market very well. If there is something that is confusing you, you have to ask now. Anything you don't understand?
No, man, I think it's clear.
Are you sure it's clear?
Yes.
Okay. So now, again, if I go to the weekly time frame, right?
Yeah.
Vasil, what can you see in the weekly time frame? There is no many structure right here. But in the weekly time frame, the structure that you can still see is this one right here. We created this low and we created this high, then we broke that low. You see?
Yes.
When we broke this low, what did you see market do? Market retraced back up to continue going down, right?
Yeah.
So which means, at what time did market broke this low now? Right here. What did market do? Retrace back up. Where is your order block that market may likely retest in this case? Right here. That is why you have to know a lot of point of interest. In this case, we retested this area. This order block, of course, it was valid. it was valid, but what happened? When this black candlestick break and close below that area, you see this candlestick.
Yeah.
What did price rebalance this area and move away before it now comes back to the area that market moved to rebalance this area. So this is now your order block, this one right here. And if you go down to the daily time frame, this is how it looks. This now becomes your order block. You see?
Yeah.
So if there is anything that is confused, like you are not getting, because you cannot understand this in a day, but this is market structure in the finest. As soon as a low that is supposed to be respected in a bullish market, you understand what I'm saying?
Yeah.
Got violated. Let me just say this low. So when market break this high with this high, so we created this low, right?
Yes.
So this low was supposed to be respected. So we were expecting price to pull back and respect that low, or as soon as price break this structure, it pull back, it was supposed to create a new high, right?
Yeah.
As soon as it failed to create a new high, now market is now pulling back down, also break the low that was also supposed to be respected. It gave you two signs. What are the two signs? First, it failed to create a new high. Secondly, the low that was created got broken. So which means if this low got broken, where is the original low that created the overall high? This is the original low, right?
Yeah.
That is the place that we are now looking for market to respect. If market fail to respect that low, that means we are heading to the next low. You understand what I'm saying?
Yes.
This is basically how it works. So before we head to this low, as soon as price break the first low, you know the next low is this one. This is where market is likely to target. So you are now looking to what? Take a trade from the area that has been created. If a break of structure occur, vasil, what happened? You will look for the highs that created the break of structure, right? So in this case, I'm going to show you multiple areas. We have this low, we have this high, then we have this break of structure, right?
Yeah.
So from which high? This was the high, right? And this is the low. Are you seeing it?
Yes.
Now, where is your other block, vasil, if I may ask you? Look at the high, look at the low. So which means there was a red candle, a black candle separation before that high was created. And now we broke the low. So which means your other block can start from here. You can see the whole other block. These two candles also align with this line, and these two candles also align with this line. And if you are that person that use a single candle, you want to use this last candle, also you are also correct.
Okay.
You understand what I'm showing you?
Yes.
So this move is a one move. Forget the fact that it created another little minor structure. You understand? This structure is basically nothing. It's just a little bit consolidation before it decided to move to where it wanted to move to. So as soon as this low was broken, so where is your one other block? Then if you are using one candle, two other block. Now this is when it gets interested. So once price has moved into your other block, you will now go down to, where is it, 4 hour or the 1 hour. You have two choices. Either you take a trade straight away, or you wait for your confirmation. What kind of confirmation that you normally see before you take a trade? You understand what I'm saying?
Yeah.
So for me, I have three types. So one is that once price moved into my point of interest, I will wait for a candlestick, the last up candle, for example, to be evaluated like this. As soon as price has broken and closed below that last candle, then you can take your trade and target whatever you wanted to target before. I don't know where you wanted to target, for example. So you can take your trade like that. Or on a normal time frame, you should be going to 1 hour. 1 hour is when you will see a daily market setup confirmation. So this was a daily area. You understand what I'm saying?
Yeah.
Again, let me go back to the daily. The time frame that we are on right now is a daily. That is where we see a break of structure. You can put 1 day BOS. You understand what I'm saying? And
Yes.
you can put 1 day order block OB. You see now?
Yeah.
Let's take out this up one. So if you have a level in the daily time frame, you want to go down to 1 hour to look for your confirmation. So let's go down to the 1 hour now. At this point, market has traded back to your order block right here, right?
Yeah.
So what are you looking for? You are looking for a confirmation. What are your confirmation? Where is the last up candle that tap into your area, your level? This one right here, right?
Yeah.
So let's mark out the low of that candle. Bim. You see how this black candle break and close below this low? It's a confirmation to you that price wants to move away now. So what do we have? Price now created a fair value gap. You see?
Yes.
So if we don't have a fair value gap, you can mark out this area to enter from this area. From that other block. You understand what I'm saying?
Yeah.
You can target this low because that was the low that was created. And you can put your stop loss just above that high or something. Let's say 30 pips because it's what I like to use. Like this. And you target this low. You see? So if when we broke this candlestick, you can mark out this way the body of the candlestick number 1. If you don't want to mark that one, you mark the candlestick that created other block, this one, this other block right here. If you don't want to mark that one, you can use a fair value gap to enter if a fair value gap was created. What if I enter off this fair value gap, my stop loss is there? You see? You still want the trade. You understand what I'm saying?
Yes.
So this is how you use your market structure and your analysis to trade. You must first of all identify the correct market structure. Market structure is kind of difficult, but it's nothing. I'm the one teaching you. It's nothing that you cannot learn here.
That's true, man.
First of all, you identify a swing.
Swing.
Swing is the higher time frame structure.
Yeah.
You understand what I'm saying?
Yes.
It's the higher time frame structure. So once you understand that, yes, there is a higher time frame and there are levels that have not been tested, if you look at this area now, you see, this is a weekly time frame. You can see it takes today for price to test this weekly level. You see, this weekly level have not been tested before.
Yeah.
This is another expo I'm giving to you. There are people, they like to stick to some particular time frame. This is where they trade. They can be like, my approach to market is with the weekly and the 4 hour for confirmation for me. So on this person, if this is the weekly order block, price has tapped into this area, it will now go down to the 4 hour. Once the 4 hour broke a structure, where is the last structure in this case? This is the last structure right here. You understand what I'm saying? Showing you now. If this structure got broken, they now have an order block, probably from here. They will now want market to do like this, break this structure and retest this level and continue going higher. While some people, they are keen to the daily, they look for a daily point of interest. In this case, we have the daily point of interest right here, which also market also tap into right here. So if they are the people who use the daily, they are now looking for what? Market structure in the what? 1 hour time frame. 1 hour time frame. So in the 1 hour time frame, where you see your market structure is still basically the same. This is still the high that was created, so which is equivalent to this one as well. So until this market structure is being broken, that is when they are looking for price to retest some levels that have not been retested. In this case, this level has not been fully retested. You can see it there.
Yeah.
Has not been retested. So probably price will now retest that level and see a confirmation to go higher. You understand what I'm saying?
Yes.
So this is a high, a low, then a break of structure. Then where is the low that broke this structure? Here. This is the other block. So as soon as price now retests that area, what happened? Phew. Market will now go higher. So where? To this area, because it was the high that was created. So maybe some other block around this area, or just some levels around this area that has not been mitigated that you may likely target.
Good.
Any question?
And it's a lot to learn, but it's good, It's clear.
I know it's a lot to learn.
Yeah.
Trust me, bro. It's a lot to learn. So I will start again. If you look at this market structure, let's start from the monthly time frame again. Monthly time frame right here. Where is the obvious low? You can see. Let's take this one out. This is the last low, right? Why is it the last low? Vasil, we created this down candle before we created this high. And this last down candle, this is where we broke this structure right here. You see?
Yeah.
So this is the low that broke this high. And this is the high that was created after this high was broken. So in the swing structure, we call it, guess what we call it?
Swing low. Okay.
Where did I write the swing low? Okay, here.
Swing high. Yeah.
Correct. Simple as that. What do we call it?
Swing high. Higher high, do you want? Swing high, yeah.
No, swing high and swing low. If I say, where is your swing low? Right here. Where is your swing high?
Okay.
You see?
Yes.
You have identified your what? Your swing low and your swing high. Let me sing it with you. And now you go to the weekly time frame. You already have your swing low and your swing high. So what is it telling you? That this market is what? Bullish. After this break of structure that was created, we have a swing what? High. There's a swing low. So market is still respecting both of them right now. Let's just drive straight to the daily time frame. Now, in the daily time frame, you have your swing low right here and your swing high. Market is respecting both the highs and low. So now, market is now working with what we call internal structure, right?
Yes.
In this internal structure, you have to look at the point where market came back to your higher time frame order block. Let's just let's just use this one. You see, where is the time that price came back to your high time frame here, right?
Yeah.
At the point when market came back to your higher time frame structure, vasil, first time was this one. What did market do? It created a high, right?
Yeah.
As market created a high, so you already know that this is your order block in the higher time frame that you are looking for buying opportunity, right?
Yes.
You want market to pull back and continue going what? Higher, right?
Yeah.
So let me shift this one so you can see very well. Where is the order block that market created that price may likely pull back to continue going higher? This one, right?
Yes.
You identify your order block. So now what is this? Higher low, higher high. When market pull back to your order block, we created a what? A higher low. You look for entry right here to take this market to what? To create a new higher high, right?
Yeah.
When you take your entry from here, you hold it to this area, market created a what? A higher high. Then market now pull back. Where does market supposed to pull back to at this point? It was supposed to be here. Are you understanding me, my guy?
Yes. Yes. Yes.
But market never pull back to that area until today. So now, leave today market, we are just following there. You will now identify this area as a level where market will what? Pull back to. Okay. Now, unfortunately, market pull back to somewhere here. It failed to come here. And what did market do? If you use your Fibonacci, right? Market pull back to the 50%, right? Do you
Yeah.
know what is 50%? 50% is a fair market value, which means that price can start trading away from there. All you need is a confirmation that if price wants to trade away from there or not. But you also have a potential area, which is your order block, that price may likely retest. That is why if you have a level, let's say I identify this area as a potential area that price wants to come to, right? You understand what I'm showing you?
Yes.
Then as price traded into this area, you will now go down to the 4 hour. What are you looking for in the 4 hour? You are looking for a shift in market structure. What is that shift in market structure? A market that is telling you that price wants to trade away. So what happened right here, Vasi, is this. When price created a low, a high, it created a lower low, then it breaks this structure. You see? At this point, this now becomes your order block. Right here. So you wanted market to trade back and continue going higher. That is how market keep on going higher to create a new high. But if you are looking for a real confirmation, you go down to the, where is it? It was here, to the 1 hour. So in this 1 hour time frame, at this point is where market tap into it. And where is the order block? You can use all of this candle like this. You see? You can use just this one. You see? Or you can use the fair value gap. My brother, are you seeing all of it?
Yes.
It's up to you to master which one you are going to be using in the future. You understand what I'm saying?
Yeah.
I like, in this case, I always like to use consecutive candle because there is a green candle here. So all of these consecutive candle can become my order block. I know how to use it very well. I can also just use the last candle right here. This last green candle, I can just use this one as well. This is I know how I use my strategy. You
Yeah.
understand? I know
Yes.
how to use it. That is why you I will teach you, then you will develop your own entry method, your entry strategy. How do you develop it? How do you master it? You keep on practicing with it every day, every time with the pair that you trade until you understand how you are confident of entering that market with your style. You understand what I'm saying?
Yes.
That is how you do it. So we have a fair value gap. You can enter off there. We have this consecutive candle. You can enter off there. We have this last down candle. You can enter off there. It's up to you, my brother.
Good.
So again, we are going back to the daily time frame. That was just an entry style that I showed you when market pulled back to the 50%. So you could have hold this market to take out this high. You understand what I'm saying?
Yeah.
So when market took out this high, now we now created all this high, then we pull back into where? Area right here. This is some essential area. So when we pull back into this area, let me just say there is a green candle, there is a black candle. So this is the last black candle. You see?
Yes.
Can you see?
Yes.
All right. And if I mark out just the body of the candle, I like to use line. I don't like to use zone. Did we tap into the body or not? Right
Yes.
here.
Yeah.
Okay. So now you could have taken this trade from here to take out this high. This is where it got interesting. When you take this trade from here, again, let's go back to the 1 hour to see a confirmation of taking that trade. This was the area, right? Yes. At the point, price tap into this area, we created a high, another low, a high, another low, then a high. So this didn't really have much entries criteria for you to enter this trade, but this is where you were supposed to look for entry method. Let's see the 4 hour if there was a chance of entering this trade. In the 4 hour, a high, a low, a higher high. This is the other block, a fair value gap. We didn't never traded back to this area, so it doesn't really matter. Let's see the 12 hour. No, 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 no. Let me go back as far as 15 minutes. Let's see if we can look for. Oh man, no, because the market is too backward, so it cannot show the 15 minutes time frame. But it doesn't matter. Continue with my teaching. So this could be the entry to the upside to take out this up. So what happened right here was that we failed to take out the high,
Yeah.
and this is when the market got interesting, because when we pull back here, we created the high, market pull back to some area, then we created another high, but it was not a higher high. This is when it gets interesting, which means the low that created that lower highs was where? This low right here, right?
Yeah.
So which means if this low gets broken, it means market has changed faces and we might be targeting this low under, because we have violated a low that was created. You understand what I'm saying?
Yes.
The same as this low, as soon as we violate it, we know we are coming to this area. But now, when we violate this low, a change of character or a break of structure, you look for the last area that created the low. Where is the last area? 1, 2 candle was the last candle, and of this one as well. So you marked out however you want to mark out, if it's just one candle as your other block, or if it's just the 2 candle like the way I usually mark. It's up to you. Then you identify that area, then you wait for price to trade back into it. As soon as you break it, price traded back into that area and what? Targeted this low, because it is the next low that was supposed to be what? Targeted. You understand?
Yes.
So targeting this low, we also broke the low. We didn't sweep the liquidity, we broke the low, and we didn't trade it into this area. So market could have just do this, break the low, traded into this area, and this will be a confirmation that market has rebalanced all the market balance imbalances, because when market created the high, we balanced this area, we created the high, we never balanced this level. You understand what I'm saying? If market came back here to balance this level, trust me, by now DJ might be seeing high again. To what? Create another like this, then a high, create another like this, then a high. You understand what I'm saying?
Yeah.
So just because we haven't balanced that area ever since, that is why when you extended this line, this is when we came to balance it today. So the whole mission was to respect this high until we came here. Now, any high that came into this area, as soon as that high got broken, which is somewhere here, now it will tell us that market has shifted structure to the upside. So we will now be targeting the high that was created. Where? From here, from this low to this high, now to here, to wherever we might created the high from. So you see, now it will now become your swing structure, a semi-swing, I will call it. You understand what I'm saying?
Yeah.
It will not become a semi-swing. You can see a semi-swing, you also have a lot of market structure inside. You understand what I'm saying?
Yes.
Whatever, like this. Then if we now, you can see a change here, then we now have another, all of these are market structure inside the market structure.
Yeah, it's good, man. It's good.
So this is for this, and yeah, if you want to talk about something else, yeah, we can also just talk about something else. And if I'm telling you about the point of interest, you can see in this case we have this other block as a what? A point of interest, right?
Yes.
And if we are talking about inducements and liquidity, you can see this low that was hanging right here is an inducement to this level. It's a liquidity to this level. Why is it a liquidity? Because buyers have been buying. So their stop losses are in danger because this market is coming to wipe them out and tap into your point of interest. This is why this low is now a liquidity. You understand what I'm saying?
Yeah.
So, yeah. Why is my brother calling me? Hold on. Alpha. Ivy. I did class. Oh boy. I do. Like silver no get liquidity. They trade market when no get liquidity. Silver no get liquidity. That be one thing you never understand. Now they tell you so. If